there are three ways you're going to get compensated from your business. One is W-2 salary. Two is K-1 distributions. And three is other benefits.
You're listening to the Profit First for Lawyers podcast, the official companion show to the book Profit First for Lawyers by RJon Robbins. Now, this podcast is for you if you want to bring home more profit while working fewer hours in the office, spending even more time with your loved ones, and turning your office into a lean, mean, profit-breathing machine. So if you're tired of working for your law firm instead of your law firm working for you, stay tuned for some really practical insights that will get you the results you've always wanted. It's time to put your BS aside for the next few minutes and put yourself, your family, your firm, and your profit first. Welcome back to another episode of the Profit First for Lawyers podcast. I'm your host, Carly, and today we are continuing our 7-part series on financial literacy with part 3, Total Owner Benefits. Now, if you missed parts 1 and 2 of the series, we have those linked in our show notes below. In the meantime, here's just a really brief recap. In part 1, we talked about the idea that you might not actually be bad with numbers. You probably just weren't trained to see the story that your numbers can tell you about your business. In part 2, we talked about the stages of law firm growth and why the financial information that you need becomes more and more important as your firm gets bigger. And today, we are going to talk about a concept that I think is incredibly important for law firm owners to understand: total owner benefits, or TOB. Because when you ask the question, how profitable is my law firm? The answer might be more complicated than whatever shows up on your profit and loss statement. That doesn't mean, of course, that your P&L is wrong. It just can't tell the whole story. And that is where total owner benefits comes in. Today, we're going to start with a clip from Chapter 9 of Profit First for Lawyers, where RJon explains why the profit your firm produces for you is about more than just the financial profit a business can return to investors or whomever. It's also about what the business gives back to your life. And then after that, we'll go into a clip from the 2019 Profit First for Lawyers Financial Literacy Workshop, where RJon walks through how to calculate your total owner benefits. So the first clip is kind of the why this matters, and the second clip is the how this works. And as you listen, I want you to keep one question in the back of your mind. How profitable is my law firm really? Let's roll the clip.
The most important opinion about the profitability of your law firm that you must be concerned with, of course, is your own. And here is where it gets a little bit tricky, because as the owner of the business, we must, at least we should, take into consideration more than what is conventionally understood to be profit. As entrepreneurs who built our firms from nothing and who wake up every day and do it again, we must ask ourselves a deeper question. Compared to what? For example, let's say you and I had the opportunity to invest in 2 different law firms, Firm A and Firm B. Firm A. This law firm will give you about $1 million of personal income. This law firm will require you to work 70 hours a week doing work that you hate for clients who you will despise. And you never get to take a vacation, or else the minute you step away, the wheels are going to fall off because there are no documented policies, procedures, or operating systems that empower the staff to keep the machine running while you are away. But you will personally earn $1 million a year. Now let's take a look at Firm B. Firm B will give you only $500,000 of personal income per year. This law firm requires you to work an average of about 50 hours a week, doing work you find meaningful for clients who you care about. Firm B has been equipped with good enough operating systems and staff to allow you to take time off for all of the federal holidays, plus you can take a real vacation for 30 consecutive days each year with emergency access only, and a high degree of confidence that while you are away, each of the 7 main parts of the law firm will keep going and even growing in your absence. This way, you can actually enjoy your vacation with the confidence that when you get back, you won't find a smoldering pile of you-know-what waiting for you. But you will take only half as much financial profit from firm B as compared to the amount of financial profit you will take from firm A. Which of the two law firms do you think your banker, your CPA, or your bookkeeper would tell you is more profitable? Which do you think your spouse or significant other would say is more profitable? Which law firm do you imagine most of the lawyers who you hang around with would consider to be the more profitable law firm? Most importantly, which law firm would contribute the most to your overall happiness as a human being? Admittedly, these are extreme examples, but which of these two firms would you prefer to invest your time, energy, and attention to grow? We use total owner benefits as a tool to compare real profits that a law firm delivers in service to the owners, as opposed to only the financial profits that the law firm can return to investors. In other words, total owner benefits speaks to the profits that you as the owner derive from owning the law firm.
I really love starting there because it gives us the bigger picture before we get into kind of the mechanics of it. So your law firm is not just supposed to produce a number on a report. It is supposed to produce a life that you love. Of course, money matters, but so does your time and your flexibility and the kind of work that you get to do and whether you can take a vacation without the whole thing falling apart. Now, in this next clip, we're going back into that 2019 Profit First for Lawyers workshop, where RJon gets more tactical and starts walking through how to think about TOB in real numbers. Let's roll the clip.
There are three ways you're going to get compensated from your business. One is W-2 salary. Two is K-1 distributions. And three is other benefits. W-2 salary is a regular job. That is how most of your employees work. As W-2 salaried employees, you get Social Security, unemployment taxes withheld from your paycheck. It goes through a payroll service. Pretty standard stuff. Second is K-1 distributions. These are profit distributions that you get as an equity owner of the business. And then there's other benefits you get from owning the business, such as the car, the trips, the quote unquote business trips, the home office, the capital improvements the business makes to improve your home office. It's important you take all of that into account, because if you just had a regular W-2 salary job working for someone else's business, you would have to pay for that car yourself. You would have to pay for those trips yourself. You would have to pay for all those other things that you get to enjoy yourself. Does this make sense? Mm-hmm. Okay. When you add all of it together, your W-2 plus your K-1 plus the value of all the other stuff that the business does for you and gives you, that is what we call total owner benefits. You got that? Total owner benefits. So now we're going to make a distinction. We're going to slice that pie up and make some distinctions. Technically, the only profit your business gives you is K-1. W-2 salary doesn't really count as profit because that's just your job, right? That's not profit you get because you're a business owner. That's salary you get because you're an employee of the business. And assuming that the business is paying you no more, no less than it would pay anyone else to do the same job or jobs, plural, that you're doing for the business isn't really getting any kind of real benefit there, other than the fact that it's got a presumably very diligent employee.
A really quick pause here. We are going to play the section on calculating your normalized salary, but we're going to do that in part 4 of this series because it's a brilliant clip that really helps break it all down. So stay tuned for that next week. And in the meantime, just know that the normalized salary number that RJon and the workshop attendees came up with was $82,500 of W-2 income. Just for the sake of this example, that is not a prescription. Okay, let's roll the rest of the clip.
So your business should pay you $82,500 of W-2 income. Take that W-2 income, and then let's say the business has $1 million of income, and let's say it has $800,000 of expenses, which includes this $82,000, right?
Mm-hmm.
How much profit does the business make?
$200,000.
$200,000 of profit. You got it? Everyone understand what profit is? Now, if we say the business only made $200,000 of profit, technically from an accounting standpoint, that is true and correct. But that doesn't accurately describe all the benefits you get by being the owner of the business. Because one of the benefits you get by being the owner of the business is you get an $82,000 job.
Mm-hmm.
So $82,000 job. That's part of the benefits of being an owner of the business. You get to give yourself a job. You've got a flexible work schedule. You got a really nice boss some days. You know, you get to have a job. You understand that having a job is a benefit, not an entitlement, right?
Mm.
And part of this $800,000 of expenses is the $82,000. But part of the $800,000 of expenses is your car and your home office and your travel, etc. Can you just guesstimate a range of what you think the business probably gives you in terms of all those other kinds of benefits?
About $100,000.
$100,000. That has to be accounted for somewhere, right? So we pulled $100,000 in other benefits. A lot of these are benefits that you probably wouldn't give any other employee. But you as the owner, you get to make these decisions. So you've got $200,000 of K1, $82,000 of W-2, and $100,000 of other benefits to come up with a total of $382,000 of total owner benefits, right? So if you ask an accountant using generally accepted accounting principles, how much profit did your business make? How profitable was your law firm? The accountant is going to tell you 20%.
20%, yeah.
See? 20%. If you ask me, how profitable was your business? I'm going to say, well, your total owner benefits is 38%. Gives you a 38%, a $382,000 lifestyle. Good for you. See the difference? This, by the way, is one of the major dangers that you have, that you run into when you go and talk to other business owners about how profitable their business is compared to yours. Well, just tell me how profitable other family law firms are. Just tell me how profitable other law firms are of my size. Just tell me how profitable, blah. Well, first of all, we have to have a conversation. If someone tells you how profitable their business is, first thing you need to know is, what is your normalized labor salary. And if they can't give you an explanation like this, and they say, I pay myself $160,000 salary, well, then maybe your business is more than 20% profitable because maybe you're overpaying yourself on the salary. I mean, you're going to run into one of two extremes here. You're either going to run into people who are going to tell you their business is not very profitable because they're not taking into consideration the other benefits that they run through the business, or they're going to say it's less profitable than it really is because they're not really taking into consideration the value of having a nice, cushy W-2 job. Or you're going to get people who are going the other direction and they're bragging about how profitable their business is, but they're cheating because they're underpaying themselves on W-2 salary, right? Because if the job you're doing for the business is a $100,000 job and you only pay yourself $50,000 in salary and you call the other $50,000 profit, that's not really profit, is it? It's illusory profit. So you see the distinction we're making between total owner benefits versus real net profit.
Profit is not just what shows up as profit on a report. It is the life your law firm allows you to live. So how do you take action today? Well, today, I want you to sit with this question. How profitable is my law firm really? And not just according to your P&L or compared to whatever someone else says their firm is doing, but for you, what is your law firm actually giving back to your life? And just start there. And if you don't like the answer you get back, maybe take one more step towards greater profitability. Just write down what changes you want to see in your law firm and or your life. Pick the very smallest and the easiest one and just fix that one thing. And then you can tackle the next one. The point is not to solve everything today. It's just to start asking the better question, right? What is this business actually giving back to me as the owner? And once you know the answer, you can choose just one step to make that answer better. And that's what we've got for you today, folks. Now, stay tuned next time as I grill Evelyn Aucoin from How to Manage. Now, Evelyn is a CPA with more than 30 years of experience, and she is a profit first whiz. So I'm very excited for you to hear that conversation. And then in the next part of this financial literacy series, we're going to continue with the exercise that RJon started here. And we're going to talk about normalized salary. Make sure that you're subscribed to the show so that you get notified when new episodes drop, and we will see you there. Thank you for joining us on another episode of the Profit First for Lawyers podcast. If you're enjoying what you're hearing, tell a friend and buy your copy of the book at profitfirstforlawyers.com. Your future self will thank you for it, and we will see you next time.